Today, we want to tell you about a specific real-life example of a buy-to-let investment property purchase from my own portfolio. We're going to tell you the numbers, the model, the location, and how I'm managing it now. We'll show you behind the scenes of just one of the ways that we at Money Unshackled are using to achieve financial freedom through investing. Let's check it out.
Welcome to MoneyUnshackled.com, the investment channel that sets you and your finances free. I'm Andy, this is Ben, and if you like what we say, hit the like button, click subscribe, and check out some of the sweet cashback offers in the description below where you can earn hundreds of pounds in cashback. Let's get into it. We've said before how Ben's portfolio is built around a core of property investments, whereas mine is majority stock market. We'll do a video soon on some of the things I've been investing in for those interested in real world stock market examples. But first, let's take a look at what can be achieved with property.
A 3-bed terrace in Leeds. I won't tell you exactly where this property is because it would not be fair on my tenants, but I found this little gem in Leeds. The finish throughout was top quality, if a little small. The garden for me was a selling point, with solid fences and space for a young family to play.
There are several property models that you can choose, and a popular one is known as BRR, Buy, Refurb, Remortgage. This involves buying a house as a shell, spending tens of thousands or whatever it takes to refurb the house, and then remortgaging it to release equity. A simpler model is just to buy a house that is already finished, meaning you can mortgage all or most of the upfront spend without spending on improvements, in what we call the fast and ready model.
I have followed the BRR model successfully on other purchases, but this time I went for a more straightforward purchase of a cash flow asset, one that we think anyone can follow. We like this model as we think it is quick, easy, and gives reliable, chunky returns.
Now, let's look at some of the numbers. In the north of England, as with so many other places in the UK, a good rental property can still be bought for around £100,000 to £140,000 mark. This house cost £110,000, which was around the asking price and a fair market price. Nothing fancy, so no hanging around outside of auction houses. Just a straightforward purchase found on rightmove.co.uk. The minimum deposit you are allowed in almost all cases for buy-to-let mortgages is 25%, so this is what Ben went with. We always use mortgages to buy property as it amplifies your returns. More on this at the end of the video.
The mortgage rate I got was a 1.79% 2-year fixed rate mortgage from NatWest. Anyone can achieve these amazing rates. However, most banks want to see that you are earning at least £25,000 from your work. Here's the breakdown of my upfront cash outlay. You'll notice that the actual asset cost me £27,500 plus £500 of value-added works to improve the bathroom, but the amount I had to pay to complete the purchase was far higher at over £33,000.
This is down to the number of people who want a slice of the pie whenever someone buys a property. You have to pay lawyers and bankers to facilitate the process, and optionally you can pay mortgage brokers to make your life easier and surveyors if you want help identifying any problems with the house structure. The biggest slice of pie goes to the greedy taxman. Stamp duty land tax is high in normal residential house sales. If a house is classed as a buy-to-let, the gloves come off completely and you have to pay through the nose. We've done a video on the evils of stamp duty, which we'll link to in the description below, so check that out after.
The returns. Let's now look at how much money this property makes for me each month while I do nothing. Rent in Leeds for an average terrace house can range between £550 and £850. This is a decent house in a nice but poorer part of the city, so rent comes in at £675.
It is worth noting that the higher end of the rent scale in Leeds comes in at property over £200,000 rather than £110,000, meaning your percentage rent returns are much lower at the higher end of the market. There could of course be greater capital returns at the higher end of the market, but this is far more unpredictable. Whereas cash flow from rent is far more tangible and predictable.
The highest cost and largest risk factor is the mortgage interest. You can see how this would affect profits if it were to rise significantly. I also use an agent to manage my properties for me, making the investment almost fully passive. No late phone calls about broken toilets for me. Throw in a few other expenses like saving towards the annual gas certificate, insurance, a provision for future maintenance, and an empty house provision, and we have a fully functional asset.
A mortgage interest rate rise is of course a risk, and we've previously spoken about how investors would weather such a storm in the case of a significant rise. We'll link to a video on our current thoughts on this in the description below.
So, my pre-tax return on investment, or ROI for short, is 14% before capital gains. Not bad.
Everyone's tax rate is different depending on your circumstances, so to keep this video simple and relevant for everyone, we'll assume a tax rate of 20%. Which is the basic rate of tax and close to the corporation tax rate, giving an after-tax ROI of 11%.
A Brucey bonus. What would life be like without a Brucey bonus every now and then? Because I bought with a 25% mortgage deposit instead of buying outright, any capital gains are multiplied by 4. And they are all mine to keep. The bank gets none of this.
If we assume inflation to be 2.5% over the long term, an average annual capital gain of 10% on your initial cash investment can be assumed. This is of course additional to the cash return on investment, which takes our total return on investment to around 21% before capital gains tax. Brucey would be proud.
Question of the day. Now that we've demonstrated just how easy it is to attain these returns, will you be following suit, or are you still too scared by the interest rate risk? Let us know in the comments below.
Thanks for watching. On this channel we talk a lot about personal finance, investing in all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.